Here's a question most people never stop to ask. If something is truly affordable, why do you need to break it into 36 payments? That phone you're financing, that car, that furniture, that vacation you put on a credit card. They all came with the same promise. Don't worry, it's just a small monthly payment. But here's what no salesperson will ever tell you. Those small payments aren't helping you afford things. They're helping you afford the illusion of things while silently keeping you behind. Let me paint a picture. You're earning a decent salary, maybe $50,000, maybe $70,000, maybe more. On paper, you should be building wealth by now. But every month, the money comes in and the money disappears. Not because you're reckless, not because you're bad with money, but because you've signed up for a dozen small payments that don't feel like much. $350 for the car, $120 for the phone, $80 for the furniture, $45 for that subscription bundle, $200 minimum on the credit card. None of these feel like big decisions, but together, they've already decided your financial future before you even get your paycheck. Here's what's really happening inside your brain. When someone shows you a $1,200 phone, your mind resists. That's a lot of money. But when they say it's just $33 a month, suddenly it feels easy, harmless, manageable. This is called payment decoupling. Your brain stops connecting the payment to the actual price. It's the same reason why casinos use chips instead of cash. When you don't feel the money leaving, you don't treat it like real money. And companies know this. That's why everything today comes with a financing option. Everything. Furniture stores, electronics, even clothing brands now offer buy now, pay later. They're not doing you a favor. They're making it easier for you to say yes to things you would have said no to if you had to pay the real price up front. Let's do some simple math. Say you finance a car for $30,000 at 6% interest over 5 years. Your monthly payment looks affordable, around $580, but over 60 months, you actually pay close to $35,000. That's $5,000 gone just for the privilege of not paying up front. Now multiply this thinking across your entire life: the phone, the laptop, the credit card interest, the furniture. You're not just paying for products anymore. You're paying for time, someone else's time, the bank's time. And every dollar that goes toward interest is a dollar that could have been working for you instead of against you. Here's the uncomfortable truth. Affordable monthly payments don't make things cheaper. They make expensive things feel cheaper while making you permanently poorer. And here's where it gets worse. Most people don't just have one monthly payment. They have 5, 6, 10. Each one feels small on its own, but together they form what I call a payment stack. And this stack silently eats 30, 40, even 50% of your income before you've saved a single dollar. So even when you get a raise, you don't feel richer because the stack grows with you. New salary, new car payment. Bonus, new phone upgrade. You stay on the treadmill, running faster, going nowhere. Meanwhile, the person earning less than you but with no payment stack is quietly building wealth, not because they're smarter, but because their money actually stays with them long enough to grow. So what do financially free people do differently? Simple. They ask one question before every purchase. Can I afford this in full right now without stress? If the answer is no, they don't buy it. Not because they're cheap, but because they understand something most people don't. If you can't afford the price, you definitely can't afford the price plus interest. They don't avoid spending. They avoid borrowing their future to look good today. And that one mental shift changes everything. Here's what I want you to take away from this. Affordable is not the same as wise. Every payment you sign up for is a vote against your future self. So the next time someone offers you an easy monthly plan, ask yourself, who is this really affordable for? Because it's usually not you.